Hey everyone, welcome back to my channel. It's Nazak with Ashia back with another video. Today we're going to be talking about Tattooed Chef and we're going to be doing an update on it. So before we begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking part in any investment scheme. Let's get into it. So I remember that my first official video was the Tattooed Chef video, like early on, like one of my first videos like first or second, and now I'm back. All right, so let's look at the Tattooed Chef stock first. Ticker symbol TTCF, currently trading at $20 exactly, and over the YTD over like 1 year, over the past year, it's up 38.22%. Not bad for a young stock like this one. Also, we want to look at the market cap as 1.64 billion. That's really good because they're rolling in cash and they're still so young. The PE ratio is 32.03, which is above the stock market price. This means that investors see more growth in the stock and they're willing to pay more per share. This could also mean it's overvalued, but it's not overvalued because what I'm about to show you counteracts that. The acquisition of Foods of New Mexico is opening up new markets and opportunities. In case you don't know, Tattooed Chef is acquiring Foods of New Mexico. The demand for Tattooed Chef's products are extremely strong. Tattooed Chef will most likely be relatively safe from potential inflation risks. So that's one reason why. The other reason why is if we see this, is Tattooed Chef Inc. Nasdaq TTCF, a leader in plant-based foods, today announced it expects to launch its branded products across multiple categories in approximately 1,800 Kroger stores nationwide later this summer. It's growing really fast, at a very, very fast rate. A total of 12 SKUs will be rolled out nationally by September. They will find a variety of Tattoo Chef's plant-based offerings, including pizzas, entree bowls, and vegetables in nearly every Kroger. So the president and CEO of Tattooed Chef says that we are thrilled to announce our expansion into Kroger, which demonstrates our ability to expand Tattooed Chef's distribution into conventional grocery, said Sam Giletti. I'm not sure if I'm pronouncing that right, but let me know in the comments if I'm wrong. So, President and CEO of Tattooed Chef, Kroger is one of the largest food retailers in the United States, and we are excited to offer consumers more access to our innovative portfolio of plant-based products. Our continued innovation is transforming the frozen aisle, and we're just getting started. Ooh, so what that means is basically they have more tricks up their sleeve than just this. They have more tricks to grow. They have more plans to grow, and this is very, very good. So a commitment to innovation and self-manufacturing allows Tattooed Chef to continuously introduce new products. So that's really good. Next is here. Is Tattooed Chef the next Beyond Meat? 3 points to consider. I'm going to only read some of them and not all of them since we're a little short on time and I don't want to bore you people to death. So, having gone public via a SPAC merger at the start of the current SPAC craze back in mid 2020, remember that? I was just doing SPACs left and right. Tattooed Chef says in its own investor materials that it's looking to be a disruptive upstart in the fast-growing plant-based food sector. After a pair of recent acquisitions and a toothsome first quarter earnings report, investors rewarded the company with a 20% share price increase in May. Tattooed Chef's operations are thriving, despite the company having a traditional advertising budget of absolute zero. Tattooed Chef sales are booming, with overall revenue jumping 59% year over year from 33.2 million in quarter 1 2020 to 52.7 million in quarter 1 2021. An even more favorable sign for customer loyalty and brand recognition was the 105% year over year surge in products specifically branded with the Tattooed Chef name. The company also produces store branded food products for various retailers. The company is projecting between 235 million and 242 million in total revenue for 2021 and a minimum of 300 million in the coming year. The plant-based food maker is also achieving notable growth in the extent of its distribution network. According to company data, the number of stores carrying its products soared 41% between December 31st, 2020 and March 31st, 2021, rising from 4,300 to 6,065. The points of distribution jumped to 31,000 from 23,000, an increase of nearly 35%. But it's not all sunshine for the company. There's one risk. Despite its skyrocketing sales and its relative freedom from the expense of a significant advertising budget, the Tattooed Chef still registered a net loss in Q1 2021. Sidebar here, this is totally expected because they are such a young company. They have recently gone public and they're still getting things together. The company's bottom line has worsened year over year. It produced positive 5.9 million net income in Q1 2020 versus a 7.9 million net loss in the same period this year. It has seen a rise in operating expenses, including a few million directed towards marketing and several million directed towards stock compensation. But to counteract that statement, here we go. 54.05 million in shares expected for Tattooed Chef Inc. Nasdaq TTCF this quarter. Wall Street analysts expect that Tattooed Chef Inc. will announce 54.05 million in sales for the current fiscal quarter, according to Zacks Investment Research. Two analysts have issued estimates for Tattooed Chef's earnings, with estimates ranging from $52.10 million to $56 million. The firm is expected to report its net quarterly earnings results on Monday, August 9th. According to Zacks, analysts expect that Tattooed Chef will report full year sales of 239.5 million for the current fiscal year, with estimates ranging from 238.7 million to 240 million dollars. For the next fiscal year, analysts expect that the business will report sales of $323 million, with estimates ranging from 320 million to 326 million. They reported 10 cents earnings per share for the quarter, and the business has revenue of 52.7 million for the first quarter. Oh, not first quarter, for the entire quarter, compared to analyst expectations of 46.4 million. The business revenue was up 58.7% on a year-over-year basis. During the same quarter in the previous year, the firm posted 17 cents earnings per share. So, in conclusion, other than the risk of rising expenses, a little bit rising expenses, and the losses, but the counteracting first quarter sales, I believe that Tattoo Chef has a great upside based on all of these facts, and the fact that they actually they exceeded the expectations of Wall Street based on their revenue, and that's pretty good. It's a young company. I believe it has a lot of potential upside. So thank you guys for watching this video. I hope you enjoyed this video. If you found this information helpful, please be sure to like, comment, and subscribe. If you made it till the end, if you're one of those lovely people, please be sure to subscribe and comment powder puff below. See you in the next video.